People try to time the Bitcoin market with charts like this. Logarithmic regression charts try to estimate, are we currently at the top or at the bottom of a cycle? But I believe there are better ways to gauge where we are. Because here's the problem. Charts like this only use price data. And unfortunately, they have to get adjusted over time. For example, here in 2021, if you used this chart, you unlikely took enough profit. Or here in 2022, it was the only time where we really got at the bottom of this purple area. This purple area was actually added during that time because we never fell that low. But check this out. This is now a newly adjusted similar kind of chart. So there's new versions of the same thing. The curvature of the line gets adjusted. And again, we also, even with that adjustment, did not hit the upper bound in 2021. So as a general gauge, they might work somewhat, but if we really want to time the market, if we really want to figure out when is a good time to buy versus when is a good time to sell, I believe there are better metrics, especially metrics that we cannot use, for example, in traditional finance, metrics that rely on on-chain data. Because here's the nice thing about the blockchain. On the blockchain, we can see at what point in time did, for example, a Bitcoin move the last time. We can also see what's the average cost basis of a Bitcoin, as in when it last time moved, what was the price? And so with Bitcoin, as opposed to other financial instruments, we can find out how much did on average an investor pay for Bitcoin. We can also find out what are the long-term holders doing. Are they suddenly selling when they normally don't? For example, check this out. This is the realized cap net position change. And we're seeing three bull markets over here. We see the one in 2017, we see the one in 2020, and we see the one in 2023. And each time when we are close to the end of a bull market, we see profit taking. We see how the realized cap here in orange tends to grow very quickly. So what we've got in green is how much that growth is. And again, it simply means that profits get realized, that Bitcoin suddenly starts moving hands when it tends to just be still most of the time. So the long-term holders tend to take profit when Bitcoin is close to its all-time high or when it's making new all-time highs. An alternative way to look at something very similar is the value days destroyed. So you look at for how long did a Bitcoin not move? Let's say for 2 years, it's one Bitcoin. And then after 2 years, that Bitcoin suddenly moves. Then we are destroying 730 value days. So when you've held Bitcoin for a long time and you've got a lot of those Bitcoin that you're suddenly moving, then you're destroying a lot of value days. And that's when this indicator is spiking. And this is also how I timed the exit in March of this year. 1 day after the all-time high, by the way. This video is sponsored by the premium membership. I never take any money from any crypto project. I never take any affiliate links from centralized exchanges. I never pump and dump coins. Instead, I offer valuable tutorials in the premium membership. Feel free to check it out. So I believe there are two very important metrics to time the market that is not just price data. The first metric is simply what are the long-term holders doing. This is what we just looked at. The second metric is the average cost basis. That's for the lower prices. So to find out when are we low in Bitcoin, we want to see the market in aggregate being in losses. We want to know if Bitcoin currently very high, then we simply look at when are the long-term holders selling. So let's have a look at the model that works very well to figure out whether or not we are low in Bitcoin. Check out this chart. This is the market value to realized value deviation bands. Now have a look at how nicely those bottoms align. So we had our final crash in 2018. This was the minor capitulation when we went in Bitcoin from 20K all the way to 3.5K. And then once we hit the green line, it was perfect time to buy. Then we've got the COVID crash over here. Again, we got very close to the green line, the perfect time to buy. And then after the Terra Luna collapse and the FTX collapse, again, we hit that green line and it was the perfect time to buy. Note how the tops are not aligning that well on this metric, right? Again, for the tops, we use the value days destroyed. We look at what are the long-term holders doing? Are they selling? But for the bottom, we simply look at when is the market in aggregate in losses. Currently, the market is in aggregate in profit, not in losses. So Bitcoin apparently is not hyper cheap. It's also not incredibly expensive, as in we are not above the red line. Even if we were, it wouldn't be a sell signal. And so that means if we are now buying into Bitcoin, it's not necessarily because we get such great of a deal. It's more because we believe that the current momentum continues. Because crypto does tend to move in waves, right? It tends to go somewhat predictably into bull markets and bear markets. Now there's an easier way to look at this, and that's simply just to have a look at the current average cost basis, the current realized price. And that's displayed over here as this orange line. Again, when we are below, we tend to be in very good dollar cost average territory. When we are above, we are in positive momentum. And then the big question is, when does the momentum turn around? Again, for that, I'm using the value days destroyed. Where are we currently with that average cost basis? The answer is 31,500. So once we fall below that, that's when Bitcoin is definitely cheap again, at least in its historical context. We can also try to be a bit more cautious, a bit more pessimistic. We can have a look at the average cost basis of only the long-term holders. So not of the entire market, of only the long-term holders. And that's now in this chart. That's now the long-term holder realized price. That's now in blue. And again, in the same periods of time, we tended to be below that whenever it was a good time to buy. Currently, that long-term holder realized price is of course lower than the realized price of the entire market. It's currently at 23,700, but it's of course rising relatively quickly because some long-term holders are currently taking profit. And so why only look at price data when we've got all of that super useful on-chain data for Bitcoin? For traditional markets, we don't necessarily have that data, but luckily enough, in crypto, we can be more informed. So don't be the one that gets slaughtered, that hopes for a 130k Bitcoin when we're already topping out at 60k. And don't be the one that freaks out just because we go into this purple territory, a price level we hadn't seen before. I think the key is to simply look at the psychology of the market. Are long-term holders selling? How much are people potentially in losses? What's the average cost basis? Those are of course also just models, and no model is perfect, but I do believe that they work better than just looking at individual prices. I will continue to make updates on all of those charts regularly on this channel, so don't miss that. Feel free to subscribe. Feel free to also give this a like. It helps the channel grow. In case you've got Telegram, then you're more than welcome to join us. The link is down below. Looking very much forward to chatting with you. Cheers.